everyone. I'm Federica Giacometti. I'm London Stock Exchange's Fixed Income APAC Origination Lead, and I will be the moderator of our panel today. It is a great pleasure and honor to be here with you all, and thank you for joining us again today for LSEG's Market Outlook 2022. At the same time, I'd like to thank all the speakers of the previous ESG interview for their wonderful sharing and insight. Now we're going to have this section of the summit, which will be focusing on green debt and transition economy. Our panel will run for about 40 minutes, and we welcome everyone to interact via the comments and feel free to ask any questions. Today, we're honored to have with us three industry heavyweights, and please allow me to introduce them. Our first guest is Na Wang, the head of the DCM Center EMEA of Bank of China and a member of ESG Working Group of Bank of China London branch. We also have Tracy Wong Harris, head of the Sustainable Finance Asia at Standard Chartered Bank and vice president of the Hong Kong Green Finance Association. Last but obviously not least is Wenhong Shi, head of China program at the Climate Bonds Initiative. Thank you all for being here with us today and for joining the panel. We have a lot to discuss and I want to go straight into questions. Now, my first question is for you. Could you walk us through a quick summary of what we saw in the green, social, sustainability and sustainability linked landscape last year and any insights you have of future market trends for this year and the followings? Thank you.
Thank you, Federica, and it's my great pleasure to be invited here to exchange my views with Wenhong and Tracy in relevant to the development of green and sustainable markets. It's been very cheerful to see a dynamic momentum in recent years in most every aspects for a more sustainable path, along with Paris Agreement. Undoubtedly, green and sustainable bond market has been playing a denominating role to guide the capital to more sustainable, adaptive, and inclusive projects and areas of economy. At the same time, supporting the transition of real economy through a science-based pathway and increasing the ambition of the stakeholders to reduce carbon emission for net zero at earliest in the mid of the century. And we witnesses a record high of the green bond market with volume topping $269.5 billion US in year 2019, continued the expansion of the green bond market. But it is not the least. In the year 2020, the green bond market reached its peak in the cumulative issuance to $1 trillion US, and the sustainable bond market has become accustomed to setting record-breaking annual issuance in recent years, especially for the year 2021. The last year was an encouraging year as well of sustainable finance in general, and the ESG bond market, including green, social, and sustainable bond, as well as the emergence of the sustainability-linked bond issuance. The total ESG bond market raised to $1.03 trillion US in the 1 year, more than 69% higher than the year 2020, and more than triple issued in the year 2019. Along with the blossom of the market in volume, the route for green sustainable finance ecosystem is growing steadily and structurally. Meanwhile, within this year, we see setup of Climate Bond Initiative in 2009, who mobilized and highlighted the rapid growth and committed in market transparency and analysis. And we can see UNFCCC's recognition of climate finance. We see setup of Chinese green bond market in December 2015, and it's climbed up to top 3 market globally with France and the United States. We see sovereign green bonds and social bonds tapped into the market as well, such as Seychelles Blue Bond in 2018 and UK's Green Gilt last autumn. We saw the publication of EU taxonomy and UK green finance strategy in 2019, and the update of green bond project category leading by the PBOC in 2021 of China, and the common taxonomy of EU and China published during the opening of COP26. The diversification of issuers from the almost every sector has been the route for the quick expansion from the previous years of green and sustainable markets. The contribution of multi-development banks such as World Bank, EIB, and ADB and AIIB are leading the way. More and more sovereigns started building up domestic green bond markets such as China from 2015, as well as a number of governments and central banks. Ministry of Finance tapped into green and social and sustainable bond markets as issuers to demonstrate their national determined contributions and strategies along with their zero carbon targets, such as EU, UK, France, and Hungary. And Hungary was the first green sovereign panda bond issuer last year in tapping into the Chinese domestic market. And in the breakdown of sectors, clean transportation and renewable energy has kept the largest market share in terms of the eligible projects. So this is the color of the green bond markets for the previous years. And also we can see the increase of the benefits of green, social, sustainable bonds that have imperative values to issuer for the past few years. While in the transaction level, we could see more supporting evidence that for the bonds, which labeled green or sustainable or even sustainable linked bonds, the pricing advantages lays in two aspects. There is evidence to suggest that sustainable bonds has achieved better pricing than vanilla bonds, which we can refer to several research such as CBI. The market information shows that within 56 selected Euro green bonds and 19 USD green bonds achieved a larger oversubscription than the vanilla equivalent. For example, the Euro green bonds have an average of 4.2 oversubscription, comparing with the 2.9 oversubscription of the vanilla bond. And 75% of the Euro green bonds gained better pricing concession than the vanilla bond, such as a greening, as well as price increasing in secondary market after the issuance. Germany tested for the greening as issuer, issuing green and vanilla bonds simultaneously. It also shows that the green tranche gained greening compared to the vanilla tranche. So that would be the insights from the previous years, the market development, and also we can see that there will be a momentum for the product innovation, such as the SLB and also the climate transition bond, as well as BOC has set up an issue, sustainability relinked bond, which is the innovation to connect the loan market as well as the bond market. So this is what we can see in the previous years, and hopefully that we would have a blossom for the sustainable finance market in the future.
Thank you so much, Nam. It is inspiring to see how diversified and active the sustainable securities market has been in the past year, and that also issuers, as you mentioned, are starting to rake in the benefits of these products, and investors are really focusing on investing in these kind of securities. Wen-Hong, as Nam mentioned before, the green bond market is growing extremely and has reached various peaks in 2021. But we're also seeing that transition finance instruments have been on the rise. The LSEG was the first exchange to launch a dedicated segment for these kind of bonds, and believes we will see them grow in the future. But could you let us know how issuers can ensure that they get this very delicate type of security right?
Sure. Thanks, Federica, for the very kind introduction and for the questions. Of course, it's an honor to be here and also to hear Lars' very comprehensive and also a fantastic, I would say, overview of the latest development in the label bond market. It's almost hard to follow, but I'll follow up on that. But yeah, on the transition side, I would say probably one of the biggest headline over the past couple of years is the market. And indeed, the entire economy is starting to warming up to the idea that sustainable finance should not be focused on just the green segment of the economy, but there's also a strong case for transition. That means that all sectors of the economy, especially the hard to abate sectors like iron, steel, and fossil fuel energy need to be rapidly decarbonized in light of the Paris Agreement goals in China for the 3060 climate target. Indeed, in light of that, we're seeing a very strong growth in this type of instrument that is designed specifically to promote brown to green transitions. So far, the market, we're seeing two main types of securities, the KPI-linked bonds, that's the SLBs, and also the transition bond. Our number has suggested for the SLBs, we're seeing a very, very strong growth over the past couple of years, but the market is starting to have some questions or to have suspicions about the credibility and credentials of some of the KPI-linked instruments. For example, some of the KPIs are not entirely material, or the penalty mechanism are not carefully chosen, or they're not implemented, which means we need to call for even stronger consistency and standard for those kind of instruments. For China specifically, we also say it's tied to the corporate governance, meaning some of the actors might be slightly reluctant to think about the penalty mechanisms compared to outside China. And for transition finance bond, there's also a very strong and growing appetite and demand for those type of instruments. But our data suggested that the market is still quite nascent, and also the actors need to rapidly socialize among themselves to create even stronger consensus on what is credible transition. So that calls for the development of even stronger standard and policy to focus on those hard-to-abate sectors. So the standard, according to our research and our white paper actually we published on transition bond and transition finance, emphasizes the importance for them to be inclusive and also to be based on ambitious and science-based pathways, and also similar to the green finance standard, they also need to be credible and also outcome driven, which means they should be technologically neutral, but paying attention to the results. Also, another important takeaway from all these discussions about transition finance and transition bond is compared to the use of proceeds bond that used for green products, we also need to think about and plan the instrument around entity level transition. So for CBI, we have outlined in our report some of the key principles include around what do we mean by a critical transition on the entity level. They include the entities should have robust plan, they should have implementation action, and also internal monitoring and also external reporting. The entity should address all material emissions instead of just cherry picking on the KPIs that they can achieve. And also hopefully all of the disclosure and reporting should cover scope 1, 2, and 3. For scope 3, that means upstream and also downstream emissions. We appreciate that the market may take some time to get there, but that's the aspiration. And also the transition must be going into green from red or yellow within a great time frame. The market's still not there yet, but in the future, we also need to think about supply chain engagement and also the validation of the greenhouse gas data. So so those are something we have observed in terms of market development and also the principal standard around transition. We are also seeing a lot of actions from the regulatory space. There's a lot of central banks and financial regulators endeavoring to create frameworks and taxonomy to guide transition. And from the early on, they try to also ensure consistency around transitional framework. For example, for Singapore, as they draft their green taxonomy, there is also elements building on transition. In China, the PBOC has been leading a transition framework and also taxonomy. Dr. Ma Jun, who is the head of the China's Green Finance Committee, is also working on the G20 level to create a G20 level transition framework and taxonomy, which I think according to some speech he gave, have 5 elements, which is defining transition activities, clarifying how to disclose transition activities clearly, identifying transition tools, and also incentives and guarantees for just transition. I think the last point I should emphasize is on just transition, which is something that is more on the public side, but the public regulator hasn't been really articulated clearly. I think we should all be doing more study and research on just transition. I'll stop here.
Thank you so much, Wenhong, for your insight. And I hope many issuers will follow all these suggestions when looking at issuing new transition bonds in the future, just ensuring that their transition structure and disclosure are solid, and the market will, of course, follow that. And we'll get adjusted to it moving forward. You also mentioned taxonomy, and I would like to get a bit deeper into that later on with you.
Sure.
In the meantime, now, you talked about sustainability-linked bonds before, and we know you joined the ICMA's team to provide the Chinese version of the sustainability-linked bond principles in 2020, and are also actively making efforts to bridge the SLB market development from international market to domestic China. But what do you see in the sustainability-linked bond market in the future for it?
Okay, thank you, Federica. So for the SLB, I would like to combine SLB and together with climate transition bond to give an introduction. So as we know that sustainable linked bonds and transition bonds are introduced to the market through which issuers could finance for predefined SDGs or ESG objectives in a top-down and more broad level of the organization to show their commitment to the sustainability and to provide some color of their general strategy towards this way, while the user perceives is not a dominant in this nature of the bond. So before going directly to the SLBs, we should understand that the innovation of SLB is not an one-off or random innovation. The boom of SLB is growing up, from my understanding, with the root that market has realized only green eligible or sustainable is far from enough to keep the goal of Paris Agreement within reach. Focus of funding in projects should be broadened to a higher level that motivate the issuers in all the aspects of the real economy to put their efforts in the long-term strategy in line with the carbon neutral and net zero, as well as sustainable development goals to support the whole economy or the whole community to go the way to the sustainable development goals. The market is calling for comprehensive involvement in every sector of economy, not only environmental or social beneficial projects, but also those issuers lack of eligible projects, but who will get their funding for enhancing sustainable development of their business towards carbon emission reduction. So in other words, companies that are brown at the moment could have more funding channels during its business transition, along with its national determined contribution. And also at the moment, maybe they're brown. Later with the transition financing, they could put the financing to the R&D and also to the new renewable energy. So the pathway for them for the funding of climate transition finance will be support their transition to a more environmental friendly way. So for sure, the coverage of the potential SLB together with the climate transition bond will undoubtedly become a strong supplement for the whole sustainable ecosystem. So sustainable linked bonds have seen a massive rise in the 3 years since their inaugural issuance by Enel, which is an Italy company, and the sustainable bond market has already quickly adopted the new bond label. Issuers have mostly come from the companies with a small number of financial institutions issuing their own sustainably linked bonds, while taking a geographic view. There's more sustainably linked bonds coming out from Europe in 2021. With the region accounting for over 60% of issuance coming from Europe. And sustainably linked bonds have also done significantly better than transition bonds since their inception. Well, we think that the transition bonds will broaden their market share in the following years. And also we can have some conclusion that SLB, there are several goals mentioned frequently for the SLB. For example, the most funded SDGs in 2020 in the E sector would be the Goal 7, affordable clean energy, and 11, sustainable cities and communities, and Goal 13, the climate transition, the climate action. The most funded SDGs in 2020 in the S social sector would be the Goal 3, good health. And then I would like to say some view from about the transition bond. So in addition, transition bonds merge to support issuers to pursue efforts to meet global objectives via science-based transition pathway towards 1.5 Celsius, as mentioned just now by Wen Hong as well. Green and sustainable bonds have become an increasingly important tool to finance these transitions. And the market has grown, so too has the breadth of the assets and activity that is being financed to cover more diversified cross-sector of the global economy. Large GHG emitters, however, are still largely absent and presently an opportunity for the market to aid their sustainable transition. So in order to fill this gap, those issuers which are brown at the moment, which felt locked out from the green bond market, have utilized the transition bond concept and also the sustainability linked bond as a label to provide a valuable solution for high carbon emission sectors to finance their transition. We are very happy to see that Climate Bond Initiative published Climate Bond White Paper, Financing Credible Transitions. The white paper gives rise to 5 categories of green of economy activities, such as net zero, pathway to zero, no pathway to zero, interim and stranded. So it summarized a number of leading companies in the relevant sectors, such as energy and utilities, energy distribution and agriculture as sample for reference. What other opportunities and actions could be taken in these sectors? So in a nutshell, we expect issuance of bonds focusing on environmental, social, and governance matters to rise in the future as companies take advantages of their relatively lower cost in the rising interest rate environment. And also we can see that with the introduction and also the blossom of the SLB and also the transition bond, more and more sectors and issuers in the economy will benefit in the financing, in diversify their funding channels and also enjoy the relatively beneficial in pricing. So I will stop here. Thank you.
Thank you, Na. And it's very interesting to see how diversified the portfolios of issuers can be if they look into these new type of securities that are starting to grow more and more. Given that we've focused mostly on sustainability linked bonds, Tracy, I would like to move to you because there's a lot happening also throughout the entire sustainability linked product space. So could you share with us the latest market trends in the sustainability linked loans market, and what do you think are the reasons for the huge growth over the past few years?
Sure, thank you. Thanks for the question, Frederica, and thanks for the great sharing from my fellow panelists from Nat and from Wen Hong as well. So very comprehensive. So coming back to your questions on sustainability linked product alone, in fact, absolutely right. Sustainability linked instruments record the fastest growth in 2021. And for those who are not familiar with sustainability linked loans are loans that where the margin pricing is linked to the borrower issuers predetermined sustainability performance target, we call it SPTs, and the margin will include incentive or penalty structure. So coming back to the SLL market, is now become the second largest segment, followed by green bond at over a quarter of the total sustainable finance market in 2021. So this is phenomenal. The growth over the past 3 years, phenomenal. And looking at globally, the SLL market, almost 4 times of the market volume. And in Asia, it grew even faster, almost 7 times, which come to 2 digits of the total sustainable finance market size. And driven by largely key markets in Singapore, Hong Kong, China, and Taiwan, we see. Now, the reason for the growth, I think Nat shared some of the findings. So one key element of sustainability link product is moving away from the use of proceeds, where the proceeds need to be ring-fenced to labeled assets. And with sustainability linked loan, it can actually be addressed on using and apply to general corporate purposes. To helping the company setting target at the group level instead of looking at the underlying asset. So this opened up a big market of where the GSS, so the Green Social Sustainability market that previously was not addressed to. And secondly is pricing incentive. So everyone's looking for that pricing incentive to help the borrower to articulate their ambition target in such financing. So pricing incentive, the differences where the performance, the margin is linked to the performance of the issuer for the duration of the loan is also a key feature. Now, looking at the differences between European market and Asia on SLL is, again, linking to the pricing. So we have seen outside of Asia, the market are both sided. So the margin is linked to incentive if you outperform or hit your target. And if you miss your target, there will be penalty associated to it. This is very much a typical structure outside of Asia. However, in Asia, majority of the market is still very much one-sided. So for a sustainability-linked loan in Asia, I think over 90% are still one-sided, incentive-driven only. But increasingly, we have seen both side mirror structure coming into Asia. Happy to share more case studies and when we come along later on in the sharing. And also, we mentioned sustainability-linked product structure is actually just beyond loan. So we have seen the sustainability-linked structure being applied to derivative, ESG derivative, repo, sustainable trade, on trade finance, SME, etc. So this structure can apply to multiple products and not just bonds and loans as well. Now, coming to whether these sustainability-linked products facilitate the transitions and what are the key enabler for the transition financing to scale up on this element? I think Wang Hong has mentioned quite a lot, but let me try to give some example here. So in my view, sustainability-linked structure is one of the more transparent instruments in helping to articulate the company's sustainability goal. And one of the most common use KPI, like Nan has mentioned, is GHG emissions. How do we use the sustainability-linked structure to tie to the decarbonization? How do we align to the Paris agreements and to the GHG emissions, energy efficiency reductions, and energy efficiency improvement throughout the terms of the financing? One example that we transacted for shipping for our client is to structure the KPI to tie to the energy efficiency ratio of the vessel and to be even more ambitious than the shipping industry defined on the decarbonization pathway. And another transactions, which I'm very proud, the first sustainability-linked transition bond in aviation sector, in the aviation industry on Etihad Airways. And this one, we combine the transitions and sustainability-linked issuance for on both using use of proceed and sustainability link to their transition framework to reduce the net emission levels of the emission for the airlines and more ambitions than the IT for the aviation industry target as well. As how we can use the KPI setting ambitions target for the borrower to achieve throughout the life of the transaction. And going back to the enabler, Wang Hong and I think Nan hinted earlier, transition finance is one of the most recent developments where the market is still lack consensus in terms of definition. I think Wang Hong laid out that the CBI transition finance guideline was a very good example on helping to move the market. And also data on how to collect data, measurement of GHG emissions, setting targets on, and these are often questions that we have seen being asked. So sharing an example as a bank ourselves in SCB, how we addressing this, right? So we published two reports to address these key two challenges. One is our net zero white paper, where we open up and on how we measure and calculate and setting interim target on our finance emission portfolio on the high carbon intense industry. And secondly, we also publish our own transition finance framework, setting out what are the eligible activities under the transition based on IEA net zero emissions 2050 scenario. And last but not least, we need to mobilize capital. So to accelerate our SCB net zero target, we also committed to $300 billion green and transition financing by 2030 in helping our client to transition. So with a combo of framework, mobilizing capital, and also on our transparency in the calculation, disclosing our emissions, I think this will be one of the key steps on helping the market to move forward.
Thank you, Tracy. And it is so interesting to see this side of the market as well, in compared to what we talked about, see it's the points in where they are similar, and also the areas in which they slightly differ. And I personally hope to continue seeing SLLs growing, and also more and more innovative products such as the combined transition and SLB bond that you were mentioning earlier. Talking about these innovative products that we're starting to see in the markets, now we know that Bank of China has been a pioneer issuer in this space. They keep innovating in the ESG bond market. The past few years, Bank of China priced the first climate transition bond, and last year a groundbreaking sustainability relinked bond on LSEG's markets. Can you share more about this with us, and in general around innovation and these new types of products?
Yeah, sure. I'm very honored and happy that BOC has always been a pioneer for Chinese ESG bond issuer, who has successfully priced a number of groundbreaking innovations ESG bond in its way, thriving for sustainability in recent years. In 2016, BOC London branch priced first green covered bond. So I would like to mention this innovation at the very beginning, because this bond is quite innovative, because we have the green covered bonds, we have assets backed, which we as the green bonds that issued in China, and also the proceeds of the bond we use to for some renewable energy in the green eligible projects. So for the green covered bond that issued by London branch in 2016, we have two features of green. One is the backed assets, and the other is the use proceeds. So it is quite interesting to have seen this type of bond merge into the market. And as a first financial institution, BOC publicly issued climate transition bond in last January. This transition bond offering is aligned with China's decarbonization goal to achieve carbon neutrality by 2060. The proceeds are used to finance and refinance eligible transition projects. It is also the first issuance from the global financial institutions to reference to the EU taxonomy for sustainable activity for its clarification of the climate transition mitigation transition activities and the principles of avoidance of carbon lock-in effects, as well as do no significant harm. So the proceeds are used to finance and refinance projects which meet the relevant national and regional pathway of achieving carbon neutrality, including a recognition of the heat and coal from gas, production of electricity from gas, as well as waste heat recovery and power generation at the cement plants, for which areas are not eligible for green, but is beneficial for the transition path. So I would like to also to mention about this, that it is the first Chinese issuance who reference to the EU taxonomy for the sustainable activities. So it shows that the global view of the issuers would like to ask for the combination or the uniform of the global standards for the taxonomy, which our previous panelists has already mentioned about this. And also that BOC is always on the way of innovation. We understand that SLB cannot be the bank's sweet spot products as green bonds, social bonds, while trying to link the massive market of SLL, bond issuance to link the SLL to the performance and financial character of bond will make active and positive connection of the two main financial domain supporting the real economy. BOC aims to embed this intention in the design of the brand new structure with underwriters and third parties. And finally, successfully, we launched as sustainability relinked bond in last autumn. The bond referenced the 4 core components of relevant ICMA's principles and also refers to the 5 core components of the sustainability linked bond principles. The bond coupon comprises 2 parts. One is the base root of 1%, and the coupon adjustment rate, which is the nature of the SLBs that we refer to. Through this specific structure, we achieved the target to enable more capital flow towards sustainable finance, support corporates, clients' efforts in improving their ecological environment, tackle climate change and resource conservation, and also the efficiency, and increase the social benefits and enhance the corporate governance system. So this product is kind of a specific products to link the SLLs that in the bank's loan portfolio, but to provide opportunities for the investors to engage in the sustainable goal or targets from their parts to show the investors interest and their ambition and also their willingness for a green future. So I will stop here. Thank you.
Thank you, Na. And it is always great to see how much innovation is happening in this very active and continuous movement sustainable securities market. From my side personally, it has been a pleasure to be at the side of Bank of China as an exchange for the listing of these pioneering bonds, and we hope to see even more new type of securities coming to the market from you and from other issuers as well. Given all these new products and the continuous transformation happening in the sustainable landscape, Wenhong, I would like to go back and focus a bit more on the taxonomy point that you started discussing earlier. Can you tell us a little bit about the taxonomy development around the world and the EU-China Common Ground taxonomy and what will be the next steps there?
Sure, happy to. So I think what we're really seeing right now is really a rapid mainstreaming of the green finance concept and also frameworks across the world. I think that the green definitions or the taxonomy it's also being recognized by regulators around the world as a very powerful tool and also a funding stone for the green finance ecosystem. So basically all the other important elements of the green finance market or the green finance system, be the incentive structure, the disclosure regime, or the green finance products are all based on a robust definition. And because of that, we're also saying a multiplication of different kind of taxonomies or definitions by different jurisdictions to guide financing into their priority areas and also to attract international capitals. Just based on a very rough calculation, we're saying over 20 countries or jurisdictions are developing their green taxonomies, which are taking different kind of shapes, but also, in principle, they're referencing to each other. At CBI, we're having also supporting or assisting quite a few countries and jurisdictions developing their own green and increasingly transition taxonomy. But over and again, we have heard concerns from the market actors, especially the issuers and also investors, about the confusion that is derived from the too many standards. I would say that's quite similar to the ESG space. This is really against this kind of background. The regulators are increasingly starting to talk to themselves and also to work to prevent the fragmentation of taxonomies and definitions, and also to increase the consistency, the comparability, and also the interoperability of the various taxonomies that are taking shape. This is also to reduce transaction costs and also to increase the overall market liquidity in the green finance market. Of course, it's also a very important way to increase the credibility of the financial product in different markets, especially in the emerging market, and also to drive down cost. So against this kind of background, as CBI, we also are honored to support the common ground taxonomy between the EU and China that you have mentioned. So this is an effort that is taken on by the IPSF, the International Platform for Sustainable Finance, and the taxonomy working group are chaired by the EU's DG FISMA, and also the PBOC, the Central Bank of China. And as CBI, we have worked as a technical expert to the FISMA, and our counterpart is the Green Finance Committee in China. So basically, the exercise involved, well, we have done quite a bit of work in, ranging from choosing the neutral code. We use the international code called LSEG to classify and all of the economic activities. And also we have been mapping out the Chinese definitions against the EU ones in terms of the principles, in terms of the main objectives, the technical screening criteria, and also of course, the threshold attached to each of the activities. In short, we have kind of came up with 6 scenarios to classify and also to summarize the comparison. So basically, they range from scenario 1, which is a clear overlaps between EU and China, to scenario 5 and 6, which is unclear overlap or obvious differentiations. So basically, anything come within the scenario 1 and 4 will be considered part of the common ground taxonomy. So after we published the draft, the technical working group published the draft in November 2021, which I think consists about over 50 activities. We received a lot of comments, and over the past couple months, and technical working group has worked to include a few more, I think about a dozen more pending activities to be included into the final common ground taxonomy table. That includes some of the really important, I think, areas, including the construction of new buildings and also the enabling manufacturing activities. So in terms of the next step, I think the market and also the regulators are now starting to talk a lot about the usability, which means the kind of implementation of those operation of those taxonomies. So from the regulator's point of view, there needs to be a lot more discussion and research on how do we encourage the uptake and adaptation of the taxonomies by the market actors. And of course, for the actors themselves, it's about how to net the taxonomies to guide their business operation and also the disclosure practices. I think there need a lot more work and of course discussions across the market. Of course, there are also a lot of discussions around how to turn them into market-based products and tools, including green bond indexes, ETFs, and many more. At the working group level, we're also talking about the possibilities of including more eligible activities. For example, for now, the common ground taxonomy only looks at the substantial contribution, but more work is needed to include the no significant harm considerations, which is a central concept in the EU and increasingly in the Chinese definition, the adaptation, and also, of course, the considerations around the social and the transition activities. Last but not least, we're also seeing many other jurisdictions already announcing or indicating they're interested when they're developing their taxonomy to follow that common ground taxonomy, which is basically a consensus between one of the largest developed economy and the largest developing economy. So we're going to see a lot more, socialization and also alignment going forward. And the new taxonomy will hopefully be also following the structure and the layout, the common ground taxonomy. So we're also keen to hear how the market react to, of course, the usability of the common ground and see how it will continue to evolve. Yeah, I'll stop here, please.
Thank you, Wen-Hong. And we know there's still work to do, but we're all looking forward to more uniformity, as you were mentioning, around taxonomy to ensure the issuance of the securities becomes even more easily accessible to more and more issuers and in general market participants. You mentioned common ground, and Tracy, from your side, given your involvement in the matter, it would also be extremely helpful to the listeners, I imagine, to know what is the latest development on common ground taxonomy adoption in Asia.
Sure. Before I share the latest, I actually want to share a story with you. So back in 2019, the SFC in Hong Kong hosts a green finance regulatory meeting where the EU commissions, the China regulators, Hong Kong regulators, and the TCFD secretariat from the US were in the same meeting. It is actually on the back of this meeting that I was lucky to be part of, that the suggestion to set up a technical task force for the EU-China Common Ground Taxonomy to start the work on looking at the crossover work, we say harmonization between the two, but like Wang Hang has detailedly described the exercise of looking over what are the overlapping category in forming that common ground taxonomy between the EU and China, two of the biggest green sustainable finance market. So yeah, so very happy that to be the witness all the way back in 2019 and seeing the draft came out, and the revised version will be coming out very shortly. We expect in weeks that to come. This will be coming out. Now, coming to the latest developments, so I think Wang Hang's also alluded to about some of the other countries' regulators in looking at the common ground taxonomy. So Hong Kong monetary authorities being one that has announced that they will be looking at the common ground taxonomy when they are in their consideration of looking at how, like, what common ground what taxonomy is appropriate for Hong Kong. So this is very encouraging. And with the work on the back of this, that we have set up a designated working group under the Greater Bay Area Green Finance Alliance, which is the Hong Kong Green Finance Association's leading this piece of working group to really look at what is the common ground taxonomy adoptions from the market standpoint. So surveys, research, going through with the market practitioner, and also engaging with the governments and regulators in their view, what are they thinking in terms of looking into these adoptions. So a lot of work is and focus being done and setting up this common ground taxonomy working group, which CBI is also part of in these regions, looking at the adoptions on this significant piece of work. So very, very encouraging.
Thank you, Tracy. That is great and sounds extremely encouraging, and we can't wait to see the next steps and how all of this evolves. I think we're almost at the end of our panel, so thank you all for your great insights and for the various points of view you have brought to our conversation today. I would like to ask, as a last thought from all of you, just a few words of close on understanding how all issuers, but especially in China, how we can ensure that the issuance of sustainable securities isn't just a one-off opportunity, a one-off deal, but it becomes standard practice. It becomes business as usual for all issuers, but especially in this region. Na, if you would like to start.
Thank you. So as we discussed at the very beginning, China's green bond market has started from 2015 and quickly become top 2 main green markets in the world in the following years. We could see the publication of policies in green bond issuance and the management of the external reviewers and the final uniform standard of green bond supported project categories between several departments such as PBOC and NDRC in 2021. We can see the strong ambition from seeing the blossom of domestic green bond market with various products innovation to support the transition of the entire economy. China launched carbon neutral bonds and sustainability linked bond last year, as well as the climate transition bond. So in 2021, the market welcomed 201 carbon neutral bonds with volume reaching to $40 billion equivalent, standing up more than 40% of the total green bond market share. The market welcomed 25 SLBs issuance with volume reaching over $5 billion equivalent. And we should also give ground applause to Hungary to have been the first sovereign to issue green panda bond in China interbank bond market, with user proceeds for eligible projects in transition to low carbon emission and sustainable economy. We are more than optimistic about China's sustainable bond market in the future. The carbon neutral bonds have brought room for growth. The development of the green local government special bonds may accelerate, and also the transition bonds may usher in the development opportunities. So we would like to expect more prosperous in the green bond markets in China. Thank you.
Thank you, Na. Wenhong, it would be great to hear your thoughts on this as well.
Yeah, thanks, Federica, for the question. So basically, I just have a couple of quick observations. One, it is very clear that we're seeing the Chinese issuers are both driven by and also evolving with very strong regulatory actions from China on this journey of the sustainable finance development. We're seeing that the Chinese issuers creating more robust frameworks that is aligned with international standards and practices, including a very clear market standard and practices around both green, but also increasingly around resilience, social, and transition considerations. We're hoping to see more recoupling and also integration of those considerations into the products that yet to come. Second point, the issuers can be a little bit more proactive in building awareness and the capacity of what's to come. That includes the environmental impact information disclosure, which is rapidly becoming more mandatory, the GHG data, and also the validation of those data. And of course, also there are many tools that are becoming available to help the issuers to screen qualifying assets and also get more stringent disclosure. I think all this instrument and mechanisms can be harnessed to further release the full potential of the green finance market, but also increasingly the transition finance market, and of course also to tie them to the carbon finance and the carbon trading schemes. The last point I will mention is that the issuer can also have a better understanding of the investor appetite from both the foreign green bond investors, but also the Chinese domestic investors, which is increasingly building up as the investor base to better tailor their products that they offer to the market. At CBI, we have just released a report actually on a investor survey based on the investors, both foreign and Chinese, that is active in the China's green bond market. And we encourage you to look up that report. Some of the other speakers talk about the pricing. Of course, there needs to be more understanding about the pricing aspect, including whether there is a premium. I think this is also something that at CBI we're keen to work with all of you to understand and also to do more research around. I'll stop here, thanks.
Thank you, Wenhong, and I think it would be great for our listeners if following this we could also share with them where they could find the report you mentioned, and in general all these key points are very interesting to hear. Tracy, would be great to hear from your thoughts too on this.
Sure. So for me, the blue sky is actually how do we get sustainable finance to become BAU and beyond just security. So with that, very timely, we just published the just-in-time report, which highlight emerging market need an additional 95 trillion US dollar investment to transition to net zero, and China alone represent a bigger than 35 trillion US dollars opportunities. And to address this, to move sustainable finance to become mainstream, to become BAU, we will need guideline standard that recognized by both developed and emerging market to scale up private capital, which we talk about from standard principle guideline perspective on this sharing. And also product innovations. We need continued product innovation to across the capital structure beyond just bond, but also push down to commercial bank, SME, and retail client. Like the Hong Kong government announced the issuance of retail green bond with the potential to be issuing in digital format as well. I think that is double innovation from the bond market perspective. And lastly, high integrity voluntary carbon market, we see that also play a key role to accelerate the capital flow from high carbon emitters to the one that helping to reduce, avoid, remove, and sequester carbon. So I stop here. Thank you.
Thank you so much, Tracy. And I think from all your answers, we can clearly see how bright the future of sustainable finance is, and also how much research and studies are happening in the space to ensure that this development that we've seen in the last few years is ongoing and keeps growing so much. All the approaches you mentioned are very sensible, and they will for sure support issuers globally raise even more sustainable capital. I would personally like to thank all of my panelists today for their time and their knowledge, and everybody that has tuned into our conversation. We hope you found it useful and enjoy the rest of today's events. We'll see you all again in the afternoon sessions. Thank you all.